Talk to us, Emily, about the volatility that we now see on an intraday basis and whether you want to be exposed to the trading of this market, the days on, the days off.
Yeah, Caroline, the moves in the market have been nothing short of stunning over the last couple of days. And when we look at that big rally to start the first two trading days of October, a lot of it in our mind really has to do with rates. And the rally kind of came for not exactly the right reasons. So you saw Treasury yields decline as fears emerged that there might be a Lehman type moment emerging over at Credit Suisse. And that caused investors, in our view, to go to the safety of Treasuries. And of course, as yields fall, maybe there's an indication that the cost of capital is not going to continue to accelerate at this very fast clip here, and equities have a bit of relief. And I think that that's really what happened those first 2 days. I wasn't overly surprised to see equities down this morning as rates backed up again. And then to your point, your reporting suggested that there may have been a technical element to the buying that emerged over the course of the day today with that, derivative trade coming through. So lots of things to think about right now. Not really a great time to be swinging for the fences in terms of taking risk on, even though it looks attractive right now.
Right.
We would be pretty thoughtful about managing risk today.
Talk a little bit about the fragility, because even if you thought, the Credit Suisse concerns were overblown, or some of the other things that led to some of the downdrafts that we saw over the past couple of weeks, there's still a sense here that everyone still seems to be on edge, whether you're bearish or bullish. The idea that this market could basically switch directions at any given moment.
Yeah, I think it makes a lot of sense, Romaine, to be on edge right now. You have the Fed and other central banks globally implementing the most amount of tightening that we've seen in our careers for many of us. You're looking at, 325, 350 basis points in Fed rate hikes over the course of 6 months. That is a massive amount of tightening in financial conditions, and it really, in our view, has not filtered into the economy yet. Fed, we've talked a lot about today. I've heard, people on your program and others talking about the fact that Fed policy works with a lag. And I think that's an incredibly important point right now. Fed policy is like a tanker ship. It's not like a speedboat. And what the Fed wants right now, they want it and they want it now, is to bring inflation down. It's almost like the Amazonification of Fed policy, where, we order something from Amazon, we want to deliver it to our doorstep right that minute. And that's what the Fed is trying to do in terms of bringing inflationary pressures down. And they haven't taken a moment to pause and see how that's actually, impacting the economy.